And we are live. Welcome to today's video. My name is Charles Stockton, and I'm super happy to get into this video because I made a whole presentation, a beginner's guide, in fact, how to trade the ORB strategy. All right, and I spent a lot of time on this to try to make it as simple as possible to help you guys build a consistent income and watch your portfolio grow. Okay, so without further ado, we're gonna go ahead and get into this trading strategy. Okay. Now, before we get into that, I do want to make a couple of things clear. First off, trading is extremely risky, and you could lose all your investments simply day trading. Okay, so I just have to put that out there. So let's go on. Let's go on ahead to the strategy. What's the ORB strategy? The opening range breakout is a day trading strategy where you mark the high and lows of the first 15 minutes after the market opens. Then watch for price to break above or below that range. A break above the high suggests bullish momentum, potential buy, while a break below the low suggests bearish momentum, a potential sell. The traders use this because it sets the tone for the day's volatility and direction. But I will add my personal twist to it to help you improve your win rate and not get caught in the institutional traps. The ORB pattern appears here and more markets, such as the Forex markets, the precious metals markets, including gold, silver, platinum, the crypto markets, and stock markets. However, our focus is going to be on the options markets. Okay, now let's begin. The pre-market step or step one, they're both the same thing. So during pre-market, or if you open your trading program at market open, make sure that you have all your charts open with the stocks of your choice and switch to the 15-minute time frame. Okay, the four stocks that I trade primarily are Nvidia, SPY, Tesla, and QQQ. After markets open, draw trend lines at the wick high and low of the first 15-minute candle and stretch it out until the session ends on all charts and adjust the trend lines accordingly. Okay, I'm going to show you exactly what I mean by that on an actual chart, but here is an example. All right, you just simply pretend that this first candle here is the first candle of the aftermarket opens of the day. Just draw the trend lines, stretch it out. As we can see on this slide, I am using a trading program called called Thinkorswim by owned by Charles Schwab. Okay, you could use what I'm about to teach you. You can use in basically any trading platform. It could be the Forex.com platform, TradingView. This information applies across most trading platforms. Okay, so as we can see here, just to show you exactly what's going on the left side, we see a gray box, and on the right side is a gray box. The left side of the box simply means it's pre-market, we cannot day trade, as well as on the right side, it's aftermarket, cannot day trade. So here we have the market opens, and we see that the first candle was formed. This right here is the ORB candle. All right. And like I said, and as mentioned in the previous slide, you just draw the trend lines and stretch it out to the end of the session. So now it is 9:45 a.m. Eastern time. Okay, we have now reached step 2 to trading the strategy. So now we're gonna go ahead and switch to the 1-minute time frame and begin searching for trading opportunities. And you're gonna be asking yourself, probably at this point, what exactly are we looking for? What are we looking for exactly? What we're looking for is the break and retest of the ORB line. Okay. You're going to wait for price action to break through the ORB line and wait for price action to retrace and retest with at least 2 candlesticks retracing down. 1 candlestick does not count as a retracement. Okay, so if prices is retracing and retesting, we're going to be looking for a reversal confirmation candle, which is ideally the bullish or bearish engulfing candlestick, but there are variances. Okay, I'm gonna go ahead and show you what those are. Okay, but first I'm gonna show you But first, we're gonna see here how prices broke up and retested the orb line. Okay, right here on the chart, right where my mouse is, the price broke up, broke down, retested, and it just went on and up. It just went to the upside for the rest for a majority of the day. Right here in this area is where you want to keep an eye out, monitor the charts, because right here is where the opportunities for trading, spawn. Okay. Upon zooming in, and this is all the same chart, by the way, the same QQQ chart from many slides ago. This is the same one. We zoomed in, and as we see that the price broke up, it went up, came back down, retraced, and we had at least 2 red candles retracing, and we finally got price action to retest the orb line. Okay. Now we wait for the bullish engulfing candlestick to form to give us that confirmation to go into the trade. And this is critical, guys. You want to make sure that the bullish engulfing candle has volume to support it. Okay, as we see in this example, those volume matches the previous candle, which is good. But in an ideal world, super ideal world, we prefer more volume than the previous candles. Okay, that's like super A+ setup. All right, and this pattern does appear more often than you think. So now you're probably going to be asking yourself, okay, now that the pattern appears, how do we trade it? How to trade the pattern? Let's pretend that it's the live markets and price action is trending upward and you see this pattern appear. What should you do? To keep it extremely simple, your entry point is above the body high of the bullish engulfing candle. Stop loss is going to be underneath the candle's wick. The target profit is going to be calculated by taking the distance between the stop loss to the entry point and doubling it. Here is a visual representation of what I mean. So we see, if this was real time, we see here that the bullish engulfing candlestick has been formed. We got the volume to confirm to confirm our bias. Here, we got the entry point. Boom. You got your stop loss just underneath the wick. You could put the stop loss underneath the orb line, but just keep in mind that you got to calculate the stop loss to the entry point. Double that is going to be your target profit. Okay, so double this distance is roughly right up here. This would be your target profit. Okay, and from a technical point of view, this is essentially the strategy, ladies and gentlemen. This is the whole enchilada right there. So, as I mentioned before, there are variances to the strategy. There are ways to tailor this for your personal needs. Okay, the first thing is the risk to reward, your RR. What that simply means is, it is what I said. You're willing to risk for a certain reward. So if you risk $1, then you stand to gain 2. That's a 1 to 2 RR. You can also do 1 to 1.5. So you can risk $1 to make $1.50. Or if you're a scalper, you can risk $1 to make $1. You can also translate that into percentages. So if you want to risk 1% of your account to gain 2% of your account, you can do that. Or if you have a large appetite like me, I risk 10%. But that's because I'm confident in the strategy, I'm confident in myself, and I'm confident that over the long term, the consistency will build my portfolio. Okay? So, another way to tailor this is to always use a stop loss, okay? No matter what. As part of managing your losses, always use a stop loss. I don't care who you think you are. Just make sure you use stop loss. If not, bare minimum, guys. Bare minimum. Keep a mental stop loss, okay? If you know that price action is going to hit underneath the wick and you have a mental stop loss, all right. Once price action hits there, boom, get out of the trade, market order, no matter what. Boom, I just got out. All right, and scale up slowly. If you want to skip demo trading, you can start by risking just 1% per trade. All right, it's no big deal. It's not gonna make a large dent in your account. Just risk 1% per trade, and just see how it is. Get used to it, the rhythm, and once you get used to it, you can start scaling up slowly. Okay. And then lastly, if you don't want to only use the engulfing candlestick as your confirmation candle, there are other reversal candlesticks that will let you know that prices are going to go towards your bias. Okay, I'm going to show you exactly what I mean in this next example. Okay, so here is a Tesla chart. Okay, and it's on the 1 minute, and we see here that the market opened at 9:30. I drew the orb line up there. We waited till 9:45. We drew the second orb line. Cool. It almost looked like we had a breakout immediately, but it was a fake one. Prices retraced, but it did not retest the line, so it just went up back into the orb range. And then for real this time, it went down, broke down. It retraced, came up, and retested the orb line. Now, instead of getting the bearish engulfing candle, like the system, like the trading system will call for, this is another variance. This is one of those variances. Instead of the bearish engulfing candle, we got a bearish harami candlestick instead. And as we can see here, the price action just went down, down, down. And I actually remember this trading day because I was trading, and I made a few bucks off of it. It actually went down for several more dollars. And it just goes to show you that how powerful the strategy is, how powerful this strategy really is, because if you know what to look for and you keep your stop losses in control and check, everything's good, you know, you could potentially make so much money, life-changing money. Okay, so just to recap, we now know the ins and outs of the strategy. We know that what to do when it comes to pre-market, step 1, they're both the same thing, remember. We know what to do for step 2. We know our entry rules, our target profit, how to calculate it, as well as our stop loss. And then obviously, every trader, you need to calculate how much you want to risk per trade. All right. So congratulations, everybody. You guys made it to the end. Thank you for paying attention. All right, I really do appreciate that. Join my free Discord, everybody, and follow all my socials. I have everything down in the description, ready to go. If you have any questions about anything in this video, join my Discord. I'm gonna leave the link. You can ask me there directly. I do be live streaming too. I post my results on my Discord. I'm doing all that stuff, all that good stuff. Okay. I want to be as transparent as possible. So yeah, guys. I'll see you guys in the next video. I appreciate you guys tuning in. Please like, comment, subscribe, and I will see you guys on the next video. Have a great day. I'll see you guys soon.